Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Patakia. And as you can see, we are still in the World Cup fever. The markets are celebrating. The entire country is celebrating of what we saw on Saturday night. A historic win, and it's all cheer all the way. Team Blue.
And rightly so. And I'm wearing blue to cheer for the team, indeed. And it's come after almost a decade.
Yeah,
so yeah, it's after multiple heartbreaks, stumbling along the way, and
cricket fans like yourself would be like cheering all the way, I'm sure.
Oh yeah, and at one point we were at the hopeless situation that we were at one point in that game. The coping mechanisms had already started because the memories of November 19th were flooding back again. Okay. Yeah, let's be prepared for it. But it can't get worse than that. So, but
you never know.
But you never know. Yeah, it's never over until it's over. And considering the quality bowling attack we had, we managed to pull it off indeed. But that is Team India.
We can not stop talking about cricket, but we have a market to talk about.
Indeed,
so let's get started.
We do. A show would fall short to talk about cricket, but here are the top headlines we have at 1:30 for you this afternoon. The stocks continue to hold firm with advances far outstripping the losers. Midcaps rule the roost as the index hits a record high. IT and financial services are the big gainers, even as PSU banks are dragging.
Wockhardt rides on the high. Breakpoint cited for its antibiotic drug Xenic. The drug is expected to be commercially available in India by 2025. Will be priced at 85 to 90% discount versus the global prices.
SH Kelkar is seeing shares jump over 6% after the company reported a provisional revenue growth of 8% year-on-year, and this came despite growth being impacted due to a fire at one of its units. The fire, though, resulted in an increase in the company's net debt.
PVR Inox rallies over 5% after Prabhas Amitabh Bachchan, Deepika Padukone starrer Kalki 2898 AD becomes 2024's highest grossing Indian film in only 3 days. Brokerages Nuvama and MK issue a buy rating with a target of 1995 and 1650 rupees respectively.
Cochin Shipyard bags an order for 8 vessels from Norway worth 1,100 crore rupees, while Garden Reach Shipbuilders wins a contract to build a tug from Bangladesh. Both stocks are rallying in today's session.
Okay, all right. So the markets are cheering as well. 120 points higher on the Nifty right now. It is at the day's high. The mid-caps are participating too. So it's largely the mid-cap and the small cap index which is doing really well. This rally is also led by IT names which are making a comeback. And remember, these are the names which will report results very soon. We'll be starting the results season very soon as well. The media space is doing well. We have the private banking space which is up around 0.5%. So all in all, it continues to touch newer highs for the day at least, and mid-caps at a record high for sure.
The mid-caps are the ones that are making a comeback, as you just mentioned, because it was more of a large-cap driven rally for all through the last couple of weeks, and the mid-caps have taken a bit of a backseat. But now the broader markets are participating well and good in today's session. As Sonal just highlighted, IT stocks are ruling the roost. Even mid-cap IT is also not far behind. Oracle Financial also now well above the mark of 10,000, doing very well for itself. The IT index at the highest point of the day, 2.5% higher. But there are plenty of other movers in the broader markets, and Nigel is back and he's going to take us through the stocks that are moving in trade. Nigel, good afternoon.
Well, thanks a lot for that. Good afternoon. And in fact, plenty of movers actually in the broader markets. Rane Holdings at around 11:30 a.m. odd. We did have a release that came on the exchanges where they've gone ahead and bought out their JV partner, and post that, the stock went to upper circuit. It's up close to around 20%. Wockhardt, well, that as well is locked up to close to around 20%. Remember, the market was anticipating this big launch, and once it's come about, you can't buy the stock because the last 2 sessions it's been in upper circuit as well, 5%, and today 20%. Atul Auto, one of the top performing names from the auto space, that stock is locked with a gain of close to around 20%. Just 18 months or so ago, it was less than a fourth of what the stock price is currently, but that's been one of the big movers. Some of those other movers, that have seen big volume movers today. Viranda, the stock is up close to around 18%. Let's talk about a few stocks actually that have been underperformers. Prime Focus, well, over the last few years, at times it has those starts and doesn't perform, but at least in today's trading session, it's up close to around 8.5%. Sharda Cropchem is up more than 10%. Axis Skates has returned to its winning ways. It did have a bit of a correction of close to around 15% from the recent peak, but that's turned to its winning ways. And Zen Technologies, the street is waiting by with regard to a potential QIP that could be on the cards in the coming month or so. So that stock as well is higher. Religare, we did have a big large trade that took place in the initial moments of trade, and post that the stock is flying away. You have TTK Prestige that's up close to around 5%, but actually Stovecraft, that's been a rank underperformer in the last few years. Well, in the last 45 days or so, the stock is up close to around 35-40%. So that's been a big mover. And Suraj Estate as well. The stock had gone down to around 320 rupees just in the last 1 month or so. And from there, it's up close to around 520 rupees. So plenty of movers actually from the broader markets. And since there were way more winners, I stuck to the winners this time around. Back to you.
Okay, all right. Thank you so much, Nigel, for joining us. Definitely, mid-caps are continuing to do really well in trade today. Let's do one thing now and focus on Arvind SmartSpaces. The company's annual report was issued recently. They say they plan to launch new projects worth 2,000 to 2,500 crore rupees in the coming year, and they've given some outlook as well. We have Kamal Singhal, the MD and CEO at Arvind SmartSpaces, joining us now to take a few questions and talk about the outlook going forward as well. Mr. Singhal, good afternoon. Thank you so much for joining us. Well, you know, you've ended FY24 on a strong note. You've seen bookings of around 1,100 crore rupees, so that 1,000 crore mark is crossed. How has Q1 FY25 been so far? Is it better than what you saw in Q4? What's the outlook for FY25 in terms of bookings?
Thank you and good afternoon. Yeah, last year had been a great year for us in many sense, top line, in terms of fresh bookings, in terms of new project additions, cash flows, etc., and collections as well. We are looking at similar positivity in the coming year. Historically, we have been kind of witnessing a growth of around 30-35% in all these operating and financial parameters. And we hope that this year will continue to do the same.
Mr. Singhal, good afternoon. Thank you for joining in. You know, there has been a substantial increase in your unrecognized revenue in FY24, almost to the tune of 2,200 crore rupees. Now, how much of that gets recognized this year? And can you also tell us what the launch pipeline is looking like for FY25?
Sure. So currently, from the current pipeline that we have, there are about 4,000 to 4,500 crores worth of top-line projects which are waiting to be launched. This is, of course, including all the phases of some of the larger projects. If you were to just count for the phases that we'll be launching imminently in next 3 to 4 quarters, we should be looking at a launch pipeline of around 2,000 to 2,500 crores in next 2 to 3 quarters.
In 2 to 3 quarters.
And yeah, I mean,
Please go ahead. Please go ahead.
And about unrecognized revenues, yes, the sales last year has been very, very strong. All the launches have gone up very, very well. And in that sense, fresh bookings have been going up drastically for the last 2-3 years. And that means the unrecognized revenue is going up. Out of this 2,200 plus crores of total unrecognized revenue in the books of account, we are hoping that we'll again see 30 to 40% growth in the booking values in books of account as well this year.
Okay, so you said 20 to 30% growth this year.
Yeah.
Okay, so it'll be closer to that 1,500 crore mark in terms of bookings this year. We can assume that?
That has been the trend, and we are hoping that we should be able to achieve that kind of number as we have been doing the last few years.
Okay. You know, the other good number in the balance sheet this time has been collections. So that is something any real estate investor would look at as well. If collections are going higher, that shows the balance sheet is quite strong. With more expansion plans that you have, say in Surat, in Bengaluru, do you think you will have larger capex planned here, and from here on, that would mean some pressure on cash flows? And if not pressure on cash flows, that would mean that they'll be lower than what we had seen earlier?
No, definitely we have a very strong investment pipeline. Last year, collections have been very, very good. In fact, all-time high. We generated in excess of 450 crores as free cash flows. Obviously, all that money is going into acquisition of new projects. Apart from internal cash flows, the balance sheet is totally debt-free. It was minus 40 crores on a net basis as on March 2024. So we've got a very significant headroom in raising some reasonable amount of debt on the balance sheet. And on top of these two sources, we also have a very, very interesting platform with HDFC Capital, through which we could raise additional 400 to 500 crores during the year to invest in new pipelines. So all in all these three sources give us very significant headroom to add new project pipeline in this coming year.
Since you spoke of project pipelines, Mr. Singhal, can you tell us more about the geographic split as well, say 2 to 3 years down the line? Because I was just looking at your geographic split currently, and in bookings from Bengaluru are currently around, say, 38 to 40% of your total bookings. Now, are you looking at a specific geography as well? Because a trend that has been observed among real estate players is that they are looking more towards the north aside of the core geography, say the Noida, the Gurugram region. Are you targeting a particular geography? And if you could share the geographic split, say 2 to 3 years down the line.
Sure. I mean, our focus in the medium term is going to be on our existing markets of Ahmedabad and Bangalore as a top priority. I mean, they should continue to show somewhere around 40% each in terms of fresh sales coming in the next 2 to 3 years. Apart from that, MMR is now taking some shape in our efforts. And by MMR, we mean Mumbai and Pune put together. Of course, Surat has been added with a very significant large project this year, and that gets added into the market of Ahmedabad as well. So Ahmedabad, Bangalore, MMR, Pune, these are the 4 focus areas that we have as a company in the next 2 to 3 years.
Okay. So in that, what will the other focus be? Will there be more vertical projects, more horizontal projects? Because each geography has a different idea of how they want their homes, right? What is the split currently? And does the margin differ? How does the economics look differently for a builder when they go for a vertical project versus, say, a horizontal project?
Sure, it's a very good question in the context of what we are doing post-COVID specifically, and we've seen a very clear traction in horizontal projects. We have been traditionally doing vertical projects in Bangalore for the last few years. But post-COVID, we saw a great kind of momentum coming into horizontal, and that's why we've launched 3 projects there already, and all the 3 have gone off very well. So we'll further consolidate that in the market of Bangalore. Ahmedabad traditional has been the other way around. It is always a horizontal market for us, and we do less of vertical here. Going forward, as a balanced portfolio, we would rather look at a split which is 60-40 either ways between vertical and horizontal. Post-COVID, as I just said, we got maybe more than 70-80% towards horizontal, but I think this is getting a little more balanced now. And in the new launch plan that we have for the next 1 or 2 years, we should rather see a more balanced portfolio between horizontal and vertical, both in Bangalore and Ahmedabad region put together.
What about the margin picture then in both of these segments, Mr. Singhal? How does that shape up?
Generally, horizontals are more profitable and even the cash flows are better. And that's why you see on our total collection of around 850-900 crores last year, we could generate a cash flow of around 450 crores. That's basically the product mix. And it has a lot to do with what we do on the horizontal side and the way it is configured and structured. It's a strategy which has worked very well in the last couple of years. To that extent, margins will remain pretty strong and healthy. We have been operating at 25% plus EBITDA levels in the last 2-3 years, and we see no reason to have any sort of difference in that, and we should continue to maintain these kind of margins.
Okay, all right, Mr. Singhal, thank you so much for joining us and giving us all those details. So that's the word coming in from Arvind SmartSpaces, expecting a 20 to 30% growth in bookings this year and focusing on new geographical areas as well. We'll slip into a short break. When we come back, Rahul Sharma of JM Financial will join us next to decode and discuss what to buy at record highs and the top trading bets. Stay tuned for that conversation.
Back with us here on Midcap Radar, and the market has seen a significant surge throughout the month of June, and especially the lows that it made from the 4th of June. It's been a one-way recovery, particularly the Nifty Bank as well, from almost slipping below 46,000 levels. It has now recovered almost 7,000 points from those levels. And JM Financial has come out with a very interesting note on the stocks that have seen a very significant run-up. It advises booking profits in some of them, and it also advises some recommendations which are on the verge of a breakout. So Rahul Sharma, the Director and Head of Technical and Derivatives at JM Financial Services, is joining in now to discuss more about this report. Rahul, good afternoon. Thank you for joining in. I read through your report. It mostly talks about a lot of these stocks that have seen a significant run up over the last, say, 6 to 8 months. And there's no surprise, a lot of them features the capital goods names, the defense names. Take us through the rationale for this recommendation that you have given in booking profits in these names.
Yeah, very good afternoon, Hormaz. So, Kalki 2024 is the report that we've released, which primarily highlights, or rather the name suggests, is actually, described in the Puranas as a regeneration or existence or as a new avatar, coming from a destructive period. So, Nifty is at 24,000, but there are a lot of stocks which have not participated in this rally. The bigger problem at hand with a lot of clients is, where do we bring the money from? So what we've done is we've curated a list of 26 stocks where we feel they are overbought technically on 5-year, 10-year timeframes. What that means is you could book profits. It may not be the end of bull market for these stocks, but because they've done extremely well over the last few months, it is advisable to take profits in them and move on to a new list of stocks, 26 to be precise, which we feel that can outperform in the months to come. So if you have like a 1-year kind of a horizon, we feel these are the stocks which can do extremely well. So coming to the hit list, a lot of these names are from the capital goods space, namely ABB. You have Siemens. You have something like a Trend which has month on month done extremely well. From the auto space, it is Bajaj Auto, which is enjoying the time of its life. Now, these are the stocks which are overbought as, on 10, 15, 20-year time scales, which is why we feel the time is right at Nifty 24,000 plus to be booking profits in them. Now, on the flip side, there are a few stocks, which have not participated in an equal manner in this bull run. They possess a very, very strong technical setup, and the breakout, once it happens, some of them are in the process of the breakout. And once the breakout happens, we feel there is a 30 to 50% kind of an upside that can be had in the coming 12 months time frame. So just to quickly take you through some of these names, which we feel can do extremely well, from the pharma pack, we have Aarti Drugs doing, a position very well, going in the alphabetical order. We have Affin from the IT space, which is coming out from a 3-year kind of a consolidation, ready for a breakout. From the chemical space, alkyl amines looks like the perfect candidate for a big reversal, and the kind of catch-up that these chemical stocks can play, especially after the 3-4 year bear market that they have seen, is significant. On the auto space, another heavyweight that looks very good is Ashok Leyland. It is more of a momentum candidate, but after multiple quarters of hitting resistance around the 200 area, technically this has given a breakout, and we feel this can very well head towards the triple century. Then we have something like
Okay, we'll just try. There is some technical error, but we'll try connecting with you in just a bit, Rahul. But just for the benefit of our viewers, some of the stocks which Rahul or JM Financial recommend could be on the wish list include the like of Aarti Drugs, there's Alkyl Amines, Ashok Leyland, Avanti Feeds, Canfin Homes, Deepak Nitrite, there's Divi's Labs, City Union Bank. So a lot of these chemical names, as he was pointing out earlier as well, which have not done well, could be on the list as well. Rahul, we have your list, and of course we understand a lot of these chemical names, they underperform, so there could be a comeback. But a specific name that I saw in the list, and that's Vodafone Idea. From its FPO price, it's already up, right, 70-80%, right? Do you still think there are more triggers here? You said maybe a 30 to 40% upside from current levels as well. That goes for Idea as well?
Yes, absolutely. So, if you look at the technical setup, it has been like 3 consecutive months that the stock has seen an expansion in volumes. Technically speaking, this is a bullish pull in a flag pattern that we've spotted, and the projected targets of which are anywhere in the vicinity of 24 to 28 on the upside. So we feel, this telecom is already in the pink of health, especially after the recent price hikes that we've seen. If you're holding Bharti Airtel in your long-term portfolio, it is advisable to book profits. The stock has done extremely well. Probably, switch some of it to, Idea, which can do very well. And then you have the likes of, the smaller run banks like IDFC First Bank, which can also be added into the scheme of things.
Would have loved to speak more on this, Rahul, but we'll leave it at that for now. Thanks a lot for joining in and sharing with us your views on this very specific note that JM Financial has come out with. Time for a short break here on Midcap Radar. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back.
Welcome back. Well, market is picking up pace and so is the news flow around a lot of these names. Dr. Reddy signed a definitive agreement with Helion PLC, a leading consumer healthcare company. The pharma major will acquire Nicotinell, the nicotine replacement therapy category, and related brands from Helion PLC for £500 million. My colleague Ekta Batra caught up with the company's co-chairman and managing director G.V. Prasad and began by asking the rationale behind the deal. Listen in.
As future growth drivers, we are investing in 3 different areas, of which consumer health is an important one, which is part OTC, nutrition, and other things. We already have a presence in the OTC segment, both in India as well as in Russia and parts of the emerging markets, and a little bit in US. So we want to build up this branded OTC business because it has stable revenues compared to the volatility of the pure generics market and is value accretive for us.
Okay. Well, why not look at acquisitions in the complex generics and the specialty generic space? Things which maybe a lot of the other pharmaceutical companies are doing, biosimilars.
I can't comment about the other companies, but we are open to acquisitions at the right value.
Okay. The other question is that, majority of your cash has actually been exhausted with this particular acquisition. So where exactly is the firepower for further acquisitions? When do you expect that cash to sort of build up?
So by the end of this year, we should have $1 billion in cash. Part of it, of course, we'll use for this. And we will still have cash and leverage to do other deals.
Okay. You've made 3 deals recently, very interesting ones. One was with, a licensing deal in Russia, then in the US, and now this. What is the largest strategy on a global scale when it comes to these kind of acquisitions?
So building partnerships, collaboration in licensing is a very important part of our business building. And it's not anything novel. We've been doing it for a while now.
And with that, it's a wrap on this edition of Midcap Radar. We continue to soak in this almost festive-like fervor of the World Cup win for Team India. There's a mega cash prize also that has been announced by the BCCI, by the way. We hope for a grand welcome as well once the team returns. But now, from Sonal, me and the team that put this show together, thank you so much for watching. Your stocks on the other side.